Welcome back, everyone. Today we're talking about one of the most important upcoming milestones in Radiant's journey, the 2026 halving. Now, if you've already been in crypto for a while, you already know that halving events are not just typical updates, they're powerful market signals. They slash block rewards, they make coins more scarce, and they almost always reshape the way investors and miners think about the future. Most people focus on Bitcoin halving every 4 years, but Radiant plays by a different set of rules. Instead of waiting for 4 years, Radiant cuts rewards in half every 2 years, and with its faster 5-minute block time, this network is essentially squeezing an entire century of monetary evolution into just a few decades. That makes every halving feel more intense, more impactful, and potentially more rewarding for those who are paying attention. So, let's set the stage. In 2026, Radiant's block reward will drop from 25,000 RXD down to 12,500. That's a 50% cut in new issuance, and the implications are huge. It changes daily supply pressure, and over the long term, it could change how the market values RXD itself. Unlike many proof-of-work assets that stretch out their maturity over decades, Radiant is hitting key milestones much faster, which means this halving carries even more weight. Here's why. Radiant launched in 2022 with a total supply cap of 21 billion RXD. That mirrors Bitcoin's hard cap model, but scaled up to allow for smaller, more practical transaction values. The halving schedule is built into the code. Every 210,000 blocks, or roughly every 2 years, rewards are cut in half. As of mid-2025, more than 13.5 billion RXD have already been mined. That's about 64% of the total supply in just 3 years. By 2030, more than 90% of all RXD will already be in circulation. Inflation, which started off at over $1,000 in the first year, has already dropped to under 10%, and after the 2026 halving, inflation will fall even further to the low single digits. By the 2030s, it's expected to drop below 1%. So what does that mean in plain English? It means scarcity is arriving early. Radiant is flattening its supply curve at lightning speed. While Bitcoin's last block reward is expected around the year 2140, Radiant will likely get there by around 2108, with most of the supply already distributed decades earlier. For long-term holders, that's a bullish foundation because scarcity and deflationary pressure kick in much faster. Now, let's shift to miners, because they're the ones who feel the halving immediately. A block reward cut is basically a payout. Overnight, their income in RXD is reduced by half. Unless the price of RXD rises or transaction fees increase to make up for the difference, miners have to adapt. They'll need to cut costs, upgrade to more efficient ASIC machines, or, in some cases, shut down. This shift is already happening. Radiant began as a GPU-friendly coin, but over the past year, specialized ASIC hardware has entered the scene, pushing the network's hash rate above 3 petahash per second. After the 2026 halving, that transaction will only accelerate. Hobbyist miners will continue to drop out, while professional operations will consolidate. And while some people see that as centralization, it also marks a phase of network maturity. Just look at Bitcoin between 2013 and 2017. Back then, ASICs transformed its mining landscape, but they also hardened the network, made it more secure, and prepared it for long-term growth. Radiant is going through the same kind of growing pain right now. There's also a second effect worth noting: daily sell pressure. Miners typically sell some portion of their rewards to cover costs. When rewards are cut in half, that means fewer coins are being sold into the market each day. If demand stays the same or grows, that supply squeeze often leads to upward price pressure. It doesn't happen instantly. Markets usually take time to adjust, but it's a real, measurable effect. So, let's talk about price dynamics. With Bitcoin, halvings have historically been followed by major bull runs, usually within 12 to 18 months. The pattern isn't guaranteed, but it does tend to rhyme across cycles. Radiant's faster schedule could mean those same supply shock dynamics play out twice as quickly. Here's the usual rhythm. Before the halving, hype builds, speculation grows, and accumulation starts. Right after the halving, we often see a short-term cooldown as some traders sell the news, but months later, as reduced supply kicks in and demand catches up, upward momentum begins to build. Now, Radiant has a relatively low market cap compared to Bitcoin and a high percentage of its total supply already circulating. That means there's less room for dilution. Early holders are in position, and with fewer new coins hitting the market each day, tokenomics get tighter. Again, this doesn't guarantee a bull market, but it does create conditions where price appreciation is more likely if adoption grows. And that's the key. Adoption. Scarcity alone isn't enough. Radiant's halving makes it harder to inflate the supply, but the demand has to come from somewhere. The project needs to continue building utility if it wants to fully capitalize on its strong tokenomics. That means more wallet support, easier access through both centralized and decentralized exchanges, and real-world use cases like NFT minting with the Glyphs protocol, escrow-based contracts, and microtransactions. Education also plays a big role. The more people understand how UTXO-based smart contracts work, the more they can experiment, build, and push adoption forward. The halving doesn't create demand by itself, but if utility and awareness grow alongside it, then the supply squeeze becomes a lot more powerful. So, what's the bottom line? Radiant's 2026 halving isn't just a technical milestone, it's a defining moment in the project's economic journey. Block rewards are falling, inflation is tightening, and scarcity is accelerating. For holders, this is the kind of setup that rewards patience and long-term conviction. For miners, it's a challenge that demands efficiency and scale. For developers, it's a stable monetary base to build on. Whether or not the price reacts immediately, Radiant is laying the foundation for sustainability, and if adoption catches up with tokenomics, RXD could emerge from this halving stronger, leaner, and more valuable than ever.